OPEC has agreed to slash output for the first time in 8 years after 2 days of round-the-clock talks in Algeria. Oil prices got a healthy bump on news of surprise breakthrough. Jung-soo brings us this report.
The oil-exporting OPEC countries have reached an initial consensus that a cut in crude oil production is necessary to lift petroleum prices. Oil hovered around $120 per barrel from 2012 to 2014, but fell rapidly starting last year and now sits at around $48 per barrel. OPEC reached its consensus after a 4.5-hour meeting in the Algerian capital. But it will take some time until the cut goes into effect, if it does at all. The cartel will meet in late November to determine which countries will cut by how much. Sources within OPEC have said that starting from December, the member nations will lower daily production by a combined 750,000 barrels for a total of 32.5 million barrels per day. As the news broke, oil prices surged, and with a few exceptions, so did global stock markets and energy-related shares. Initially, global benchmark Brent crude spiked almost 6%, nearing $49 per barrel, but has now stabilized at around 48. As for equities, Japan Petroleum gained 8.8%, while Korea's S-Oil was up 3.9%. The Pan-European Stock 600 index was up 0.7% in early trade, led by a 4.8% rise in the oil and gas sub-index. Energy shares also drove Wall Street higher on Wednesday, with the S&P 500 index rising 0.5%. Meanwhile, experts say the price surge could stimulate growth in certain industries.
I can say that Korea's refinery and petrochemical industries will likely benefit from the price rise, but I cannot comment on other industries like automobiles or shipping at this point. There are just so many variables to take into account, such as the U.S. Federal Reserve's interest rate hike expected in December and the volatile exchange rate.
Sources say Moscow, which is not an OPEC member, could be involved in future talks on limiting supply. Jung-soo, Arirang News.